Government has released the October employment report.
CBS News business analyst Jill Schlesinger joins us live from New York to discuss said results. So, Jill, let's just jump right in. What did the results show us?
So the economy produced just 12,000 jobs, and the reason was expected, maybe not by that much. We had the Boeing strike. That meant 33,000 machinists were not working. But also we had those two hurricanes that dented job growth. So I think this is half the story, right? We'll have to wait to see what the next couple of months show about job creation overall. But I will also point out that in this report, we had a revision lower to the two previous months. And that is not storm related. That is just the labor market slowing down. So yes, 46 consecutive months of job growth. And yes, the pace of job creation is definitely slowing.
Okay, so if the pace is slowing, why is the stock market going up?
Very good question, my friend. Because the way that a lot of investors are looking at this, they were a little concerned that the economy seemed a bit stronger than they thought. This report probably paves the way for the Federal Reserve to cut short-term interest rates at their meeting next week. They have a meeting after the election on Wednesday and Thursday. And so I think that this is really the investor way of saying, aha, Jerome Powell, you're going to cut by 1/4 percentage point next week. That puts us on the road to more sustainable earnings for different companies.
I was going to say that's kind of getting lost in all of this with the election coming up next week, the possible cut of another stock market cut there, interest rate cut, I should say. So earlier this week, we know that the government report on growth for the third quarter. How did the economy fare over those summer months, Jill?
Really pretty well, a 2.8% annualized pace in the third quarter. And guess who is the reason behind that? It is us, consumers. Give yourselves a pat on the back. We complain about prices, but we're still spending. So that is actually what has kept the economy afloat over the last couple of years. And if you look at all of 2024, it looks like the economy is going to expand by about 2.5% to 2.7%. And that is probably right back where we were before the pandemic. So for many economists, this year has been proof that we have moved beyond the COVID economy, moving back towards more of a historically recognizable growth rate for the country.
All right. Jill, thanks so much for being with us. We appreciate it.
You can see Jill regularly on CBS Mornings and the CBS Evening News with Nora O'Donnell. For more analysis, you can go to JillOnMoney.com.